Today, we're actually going to be talking about building financial wealth. I know it's been such a very heavy week for the community. I mean, we're feeling all sorts of ways and just don't know how to express ourselves at present. And it's quite challenging at the moment in sort of trying to express yourself on what of the whole situation. However, we're going to continue to do the work, and our work is to empower young people so that they're able to then be captains of industries, be business owners, be politicians, so that they can be part of the decision making process and be part of the conversations that then change the system. So we appreciate you for joining us today. Hi, Zamzam. How are you? Wow, it's been a long time since I've had a chat with you. And hi, is that Monica? And hi, Moisture Love here. Hi, Lynn Masigo. That's good. Hi, everyone. So we are going to have Nenzou, who is a financial educator, and we're going to talk about building financial wealth because I think it's one conversation that we hardly have in our community, and it's very, very important in able to be able to manage your own personal finances so that you can then make strategic decisions and build generational wealth, because that's what we all want you to do. So I actually get Wadzi to join. So I'm gonna add her and come through. Yes, I miss you too, Zamzam. And during this conversation, please feel free to your comments, your questions, your queries. Yes, I agree. We mustn't be distracted from working to create the kinds of future that we want. Amen to that. Hi, Wadzi. Welcome.
Hey, lovely. Hi everyone. Hope you guys are all good. So yeah, I'm very excited to be here.
So just a forewarning, a bit of the lack of feedback sometimes is a bit weird, but you get used to it.
Yeah, that's all right.
Yeah. So thank you so much, Wadzi, for coming through for this guest mentor series. As I said before, we're going to continue the work. Advocacy comes in different forms, and our advocacy is empowering the young people. So today, our key discussion is going to be on building financial wealth. Why is that
Yeah.
so important for us, Wadzi? And why is it so important, especially for our community?
Yeah, so this is one of my favorite subjects, and I'm very passionate about it. Because I mean, building personal wealth is important for yourself individually. Of course, it gives you that freedom. It gives you choice. It allows you to create the type of life that you want to have. It allows you to have the lifestyle that you want. It allows you to be able to do the things that you want. You're able to show up better in the world when you've got your needs sorted, when you're able to actually take care of yourself and your loved ones. So obviously, personally, it's something that's so foundational, and it allows us to truly show up in the world and actually make a proper impact when we are financially empowered ourselves. And also, of course, there's a lot of powers you just mentioned around as a community. I think there isn't enough talk about building wealth as a community and how that actually really helps the community move forward. And also how like building wealth in the community also allows us to, have that wealth move on to the next generation. In my kind of role in the financial services industry, I've seen the power of generational wealth, of wealth moving from a mother to their child, and so forth. And this is something that I think we as a community have to really focus on as well. So there's a lot of power in that for us individually, and also in helping empower ourselves, our families, and our community, and the world as a whole as well.
I like what you said there, Wadzi. It gives you choice. And
Yeah.
I mean, coming from a migrant family, I know for sure that, having the lack of choice is one of the challenges that you have, because it's either
Yeah.
maybe you can't work where you want to work or live in the environment that you want to live in or afford certain things because you don't have that financial capability. However,
Yeah.
understanding that, it can start very simple and very easy to sort of build that financial wealth. It's really, really important to have those discussions, because choice
Yes.
gives you opportunities, and then opportunities allow you to make more informed decisions and also have influence. I work in the financial industry, and I know for sure the amount of influence that financial empowerment can actually give you. So it's very, very important for us to understand and have a healthy relationship with money.
Yep.
So,
Exactly
Fadzi,
right.
where do we start? How do we start building this financial wealth?
I think a lot of people mistakenly think that for you to build wealth, you need to firstly be this math whiz, or you have to have all this knowledge. And, they have this mindset around the only people who build wealth are people who are already rolling in cash, whether it's people who are CEOs of companies already being paid amazing amounts of money, and that's the only way that you can build wealth. But the thing that I've really enjoyed about working in finance and in financial services is finding out people who are doing just middle income jobs and the habits that they've actually put in their lives, and how those consistent habits have actually helped them build their wealth. So I know so many teachers and nurses and people who just work as secretaries who've built amazing wealth throughout their working lives, just because they've set specific things in place and have consistently taken action, right? So when it comes to wealth, there's kind of a few foundational things. First of all, you need to live below your means. That's like the basic foundation, because that means you need to make sure that you're not living paycheck to paycheck. You have something left over from just day-to-day expenses. So you've got that, what you spend and what you earn. So make sure that there's a gap there. And then you use that gap, and which are the savings, and you make those savings work for you, over the long term. That's literally just the basic formula of how you build wealth. And I think wealth has a lot to do with consistency. So whether you start, I think a lot of the people for Incubate Foundation are young people, which is amazing, because that is an advantage for you guys, because you've got long term to actually build that wealth. You can start by, if you look at people who start doing things like salary sacrificing into their superannuation, for instance, in their 20s, by the time you retire, you'd have made quite a lot of money. Or people who you can save, let's say from your pay packet, you save, I don't know, $100, $200, and you consistently do that over 10 years, 20 years, 30 years. And through the magic of compound interest, my favorite thing ever, you can build quite a substantial amount of wealth. So I think a lot of people always think that it has to be this, Einstein formula in the background. It's just consistency and just starting to do something. So just take action. It doesn't matter how small it is, and maybe at the moment you can't afford to save that much, and that's fine. Just start having the habit of putting something away, whether it's even $10. I don't care how low it is. Make it a habit, and then use those savings and invest them in ways that can earn you long-term returns and build you that wealth.
Excellent. Now, before I forget, I need to actually say that, this session is on general advice, so it's not specific
That's
to
a good
anyone.
one. Yes,
So
let's not forget the general advice warning.
Yes, general advice warning. So we are talking about general terms, and then if you need anything specific that pertains to your particular situation, then we highly recommend that you seek a financial advisor. I'm sure Wadzi is happy to open up her library of contacts, who she can direct us to the appropriate financial advisors that we can actually sit down and discuss more in detail. So for the purpose of this discussion, it's very, very general. I saw a comment previously from it was Wimbai, and she said, yes, we need to self-actualize and not be focused on making ends meet. I mean, talking about making ends meet, that's all I've ever known about my parents, you know, paycheck to paycheck, you know, when money comes in, is then distributed to bills and expenses and all of those, you know, those general expenses. And to be honest, for myself, I don't think I've seen my parents save. Saving is something new that I then learned when I was in the financial industry. If I wasn't in the
Yeah.
financial industry, I probably would have a bit of a challenge in sort of trying to understand what saving means, or even what compound interest is. What is
Yeah.
compound interest?
Yeah, okay. So yes, I love compound interest. So this is something that, and I'll make it very simple. So think of it this way, right? So if let's say you've got $100, we'll start very small. $100, you put it in your savings account, like we'll say a high savings, really high savings account, and it's got a 10% interest, for instance. So you get a return from that, a 10% return. So let's say you get 110. So 10% of 100, so it gives you $10. So you add it to the $100. So you now have 110, right, from the initial $100. And the beauty of compound interest is that the following time it's compounded. Let's say it's 10%. It will now be 10% on that initial $100 plus the $10. So it's interest on top of interest. And when it goes on, you know, over the years, it can make a huge interest. So I've got a story to share that will showcase the absolute magic of compound interest. So I have two colleagues that I worked with in finance, and they both around the same age, so around late 30s. They've been in the industry around the same amount of time, and they are both superannuation nerds. I know a lot of people be like, who's a nerd of superannuation? It seems so boring, but no, there are people who love super. So they decided to showcase each other's balances because they thought, you know, we're going to be, you know, around the same balance in our superannuation. And then it turns out that the lady had about double the amount of super that her colleague did. So, and he's like, what the hell? We've been earning around the same. We've been in the industry the same time. How come you've got double your super? And then she showcased that she's actually been adding extra through salary sacrifice every paycheck. So because of that, because obviously she's adding more, it gives those returns are on a higher balance, or a higher amount. And because of compound interest, and she's been able to buy more in investments, that has compounded to mean that she actually has doubled the amount of her colleague who's been pretty much, you know, getting the same. So there's a lot of power in compound interest, on interest on top of interest. And you should take advantage of that as a young person. And even if you're not young, you don't have to be in your 20s and 30s. Compound interest is working for anyone. You just take advantage of making sure that you put savings through long term, and that will compound for you long term.
Excellent. So it sounds pretty simple in terms of, like, so essentially just putting money away and then it ends interest upon interest over time.
Well, this is the funny thing.
Actually,
it's simple. It is simple, but it's simple to say it, but people are like, well, I'd rather be buying those shoes instead of saving. So it's more the habit. The habit of actually doing it is the harder thing. I think a lot of people know what they need to do. I think the biggest thing is just the behavior of it, which is the biggest problem.
Yeah, fair enough. Well, Wimbai actually brings up a very key important issue that's quite different in our community compared to the wider community: black tax. We all know what that is. Yeah. When the paycheck comes in, there's a part for someone else, and you know, so how then can we save when we know we've got other obligations? Because, you know, within our community, the money is just not yours, it's everyone's.
Yes, so this is one of my favorite topics, because obviously I have, just like you, just like probably everyone on this has experienced and know this. So this is the thing that we have to be, in our community, we have to be very frank and open with each other and honest. And I think you need to be very frank and honest with your family about where you're at. and what you can afford. I know it's culturally taboo in some areas to say, I can't, this month
Yes.
I actually can't do it, and this is something I myself and my siblings and, especially my sibling here, we've had to navigate that, because there can be that, and there can be that misconception that you're overseas, you're rich, you can afford to send, $1,000 a month, you're rolling in cash. And yet we know, as people who live here, that we are not rolling in cash. We are trying to do our best, and we've got a lot of expenses, and it's quite, it's expensive to live in Australia and probably in a lot of Western countries. So you've got your own personal focuses. So I think the important thing is to, first of all, just be very honest that, this is the situation. I'm actually, I've got a lot of different situations or things that I need to focus on. I do want to help you, of course. And this is the thing. Most of us, we love our families. We want, what's best for them. We want to support them. But we also need to create boundaries with our families, as hard as it is. And it is hard. And trust me, it's something that I have had to deal with, and there was pushback. It was nasty. But when you are able to stand in your truth and be like, listen, I love you. I want what's best for you, but I know you also want what's best for me. You want me to also do well. And this is what's going to help me to do well. Being able to also focus on building my own personal wealth, being able to save and put money, for the future, that will help me, but it will also help you as well. It's not just about building wealth just for myself, but this is something that's going to actually help yourself, the family as a whole, if I am financially empowered. Because if I just keep on sending money for you to buy, some frivolous stuff, because sometimes, like, I don't have a problem with, like digging deep when people truly are starving and, they're like, we don't have food, we don't have anything. And that's fine. That's basic necessities. And a lot of us try our best to cover that. But we all know those people who are just like, I need some money, but they don't really need it. They just want it for extra stuff on the side. And you have to have that boundary in place and be like, I will really digging deep when you're struggling and when you truly need something. But this is where I'm at, and this is where I want to go. And also, like, share your vision with them. Showcase that your vision to take care of yourself and to, increase your wealth, it impacts not just yourself, but everyone else around, including them. And I think that can help you out. And it has helped me navigate that with my own family as well.
What was the blowback after that conversation?
Oh my God.
Relationship ties end, like when people are upset.
Listen, this is the thing, right? Another thing that I've also, and this is something that I'm going to say to everyone here, there are people who are truly people who care about you, right? We come from this extended family culture. A lot of people in our extended families don't give a hoot about you. They don't care. They really don't. But there are those people who are truly your people, the people that truly love you, and these people. They're the people who check in on you and actually care about what's happening in your life. And these are the people that you need to focus on the most. Because if you think about it, so if you're giving money to every, Jack and Jill, you don't have enough money, firstly, for yourself, but also for the people that you truly care about. So you need to also really evaluate what the people that you need to be focusing on. You don't need to be this, Mother Teresa giving, to everyone thing, because ultimately you're trying to be everyone's friend and you have the least impact if you do that. And there was plenty of blowback, but guess what? The people that actually love me, Charmaine, they got over it. And they saw it from where I was coming from, and they now are all on board, and they can see the vision of where I want to go, and they're fine with that. Those are the people that love you. They will work hard to understand where you're coming from. The people that don't care, the ones who, they'll say whatever they'll say, but who cares?
Yeah, that's true. I mean, at the end of the day, I always say, the bill is mine to pay. You know,
Yeah.
it's not anyone else's. They're not going to come to the party when my rent is due.
No,
So I have to
no,
do
they're
what
not
works
there.
best for me. Because the reality
Yeah,
is, you know, in Australia, every week that rent is due and it needs to be
yeah,
paid. And you need to make
exactly.
sure that, you know, you have that. So that's very different, you know,
Yeah,
different kind of lifestyle. And sometimes I get it. It's difficult to sort of explain to someone who's back home and doesn't quite understand what this whole process is. Because for them, you're earning a lot more money compared to the other people back home. Because I know, like,
yeah,
with where we come from in Zimbabwe, the average salary is $250 a month. So
yeah,
start telling someone that you're earning $1,200 or $1,000 a week, they think you're rolling in money.
yeah, yeah.
And
That is so true. That is true. But that's another thing as well. You need to educate them because they actually don't really understand the expenses as well. So they're just looking at it from, yeah, you're getting a lot of money, but we have a fantastic lifestyle here, but there's a price for that. You know, it's not just, you know, you have to pay for it. So
yeah,
I think also just being honest about the situation of living in a place like Australia, which is absolutely amazing, but yeah, it's also, it comes at a cost. So you need to also openly tell them that, give people a chance to actually know the situation. And most of the time they, you know, they do understand if you actually give them the chance to, and you explain what the reality is.
fair enough. And fair enough. So just honest conversations with your family and friends so
Mhm.
that they sort of understand what's going on.
Yeah.
Hello, Erased. Welcome to the party. Thank you for joining us. For everyone who's just
Hello.
joined, we're talking about building financial wealth with Wadzanai Nenzou, who is a financial educator. So, Wadzi, I know
Hello,
previously we
guys.
talked about superannuation, and this is something new that I only learned coming to Australia because back from where I'm from, there really wasn't that kind of structure where you can save for your retirement. So,
Yeah.
what is superannuation and how does it work?
So superannuation, think of it, the simplest way is pretty much a retirement fund. Think of it as a retirement fund. This is one of the things that I absolutely love about the Australian system, because it gives people the chance to save for their retirement. And the best way is that it's through the you know, your employer. So there is kind of, it's forced retirement savings, which I like. I like that because let's be honest here. If we were not forced to do this, if there was not a forced structure, a lot of people would use their money for so many other things. Because when it comes to retirement, especially for younger people, the last thing they give a, you know, they care about is what's happening 40 years from now. You know, they're not
Yeah,
thinking about 40 years. They're thinking
yeah,
about, I want to take a holiday next year. I want to go traveling. I want to enjoy myself now. They are thinking 40 years, I don't need to worry about that. So if they had that option, very few people would voluntarily be doing it for themselves. So the government came with the notion of superannuation. It became compulsory like around 1992. And pretty much it's about, at the moment, it's currently about 9.5% of your salary goes into your super fund, into your
mm,
retirement fund. So, and it's called a tax effective vehicle because within superannuation, the money that goes in is it's concessionally taxed. So what that means is it's taxed at around 15%, at 15%. And for most of us, we pay more, like, you know, our marginal tax rates, like for our salaries. So 15% is a concessional tax for us. So money that's put in by our employer, the 9.5%, or money that you put in as a salary sacrifice, it's taxed at that lower amount. So you put in the money in the super account, and when you put it in there, either you have chosen an investment option, or you haven't chosen, and then the super fund has chosen the default option for you. And what that means is that money is then invested according to either your choice or the default investment option. And most of the options within super are what are called managed funds. And that means your money is pulled in with thousands of other people, and the managed fund like the managed fund, people actually go out and invest on your behalf within the share market, within property, within fixed interest like bonds and so forth. And you're not usually able to access your super until you get to what they call preservation age. And for most of you guys, preservation age at the moment is 60 years. So you won't be able to touch that super until you get to 60. And when you get to 60, if you've retired or you've left your job, then you can access that money. So that's a summary of what super is.
So you talked about salary sacrifice, salary sacrificing into your super. Why is that so important, especially at such a young age?
Yeah. Okay, so this is the thing, right? We all have, lifestyles that we have become accustomed to. So one thing that has become clear is that if, we continue on just getting the 9.5, I mean, it's going to rise to about 12%. So in the next few years, the 9.5 is going to go up 10%, 10.5 until it gets to 12%. So let's say, even if it's 12%, they've looked and they've seen that 12% by the time you retire, for most people, is not enough for the type of lifestyle that they want or the type of lifestyle that they're used to. So when you put additional contributions in, it means obviously you're going to have a larger balance at retirement, which allows you to have the type of lifestyle you want in retirement. But also, like I was saying before, with salary sacrifice, if you start doing that at a young age, you don't even have to put in that much for that to be a huge difference for you in retirement. So starting, like I'll give an example. If you start in your 20s, you might need to put in, and this is just a random number. If you're being paid, let's say every fortnight, let's say you put in, $100 or $200 a fortnight for the next 40 years. If someone is going to start maybe like in their 40s, for them to catch up with you because of compound interest, they would have to do like, let's say $500 every fortnight for that, for that same time frame. So it gives you such an amazing advantage starting young, because then you don't have to start at such a large amount to salary sacrifice, and then you have more money to play with when you retire.
Yeah, so the compound interest aspect helps us to then sort of double our savings by the time we get to retirement. Because you start earning the interest from when you're really young in your 20s, and by the time you get to your 40s, 50s, and even 60s, that money is interest upon interest upon interest, which is really good.
Exactly right. Exactly right.
Yeah, I know you mentioned the share market, right? And what not all of us are investor savvy and understand what shares are or how you invest in them. Can you tell us a bit more about what is the share market? Why should we buy shares as another way of growing our wealth?
Yeah, exactly. So, I mean, I was just talking about super before. Super is just about one vehicle for you to grow your wealth, and that's mostly focused on retirement, right? And later on. But there are certain goals that you have before retirement. There's things that you want to enjoy before you get to retirement. And there's other ways to invest your money. And shares is one of those really popular ways to do that. And it's a very effective way as well, especially for long-term goals from 5 years or more. So with shares, the best way of explaining what a share is pretty much ownership of a company. So think of it this way: like a company decides they want to raise capital. So it's a way for a company to raise money. So they put themselves on what's called a share market. In Australia, it's the ASX, Australian Securities Exchange or Stock Exchange, whatever you want to call it. A company decides it wants to go public, and what it's doing is it's actually selling part of its company. So if you buy, let's say, 1,000 shares, or somebody who buys, let's say, 20,000, the person who buys 20,000 owns more of that company than you, but you both own part of the company. So a share is an ownership of a company. That's pretty much the basic. And a share market is exactly what you think. It's a market, buyers and sellers. It's people who are pretty much exchanging those shares and buying and selling them. That's pretty much how I would summarize that.
And how hard is it for us to invest in shares? Do we need a lot of
So
money to start off?
yeah, yeah. So this is something, it's funny because this is something I think a lot of people make. They make the mistake of thinking that they can't be on the share market. They think it's just for rich people. I've come across so many people, especially with my work with her economics. I remember a lady, I met her a few years ago. She had about 50,000 sitting in her bank account. She had saved all this money and it wasn't really doing anything. So when I say it's not doing anything is that with your money, you want your money to work for you as much as possible. So you want your money to beat what's called inflation, which is the cost of goods and services. So every year, and you all know what inflation is, because when you're a young person, you could buy something at 20 cents or 5 cents, but now you can't do that anymore. That's the cost of goods increasing every year. So with any investment, you want to beat that inflation. So she had that 50,000 just sitting in a really low rate or interest rate. So she wasn't really making that much. And I said to her, oh, why haven't you invested the money? And she said, oh, I'm not smart enough. I don't really know what to do. And there's this misconception that you need to be this whiz to actually invest in shares. But nowadays, especially these days, there's so many amazing ways for anyone to start investing. So there's, because of technology, there are amazing platforms. Like there's one called Raiz, R-A-I-Z, which is what they call a micro investing platform. So this is one where anyone, when I say anyone, I don't care how broke you are, it's literally rounds up your purchases from your bank account. Like let's say, for instance, you buy something for $4.60 and it rounds up, it takes the 40 cents and it puts it into the platform and it invests for you on the share market. So you can start that small, and it's a good entryway for investing because you get to have an idea of how it works without really doing the direct purchase of a share. But then with directly purchasing shares themselves, it's actually not that difficult at all. There's a number of options. You can either, so a lot of the major banks have got their own online share trading platforms. So like Commonwealth Combank has got ComSec. And if you're like a, what you call it, a Combank customer, you can actually, register, and then you can literally buy and sell shares from different companies on the stock exchange, Australian Stock Exchange, using this online trading platform. And if you're not sure how to do it, you can call a customer service number and somebody can walk you through that first trade so that you know how to do it. And trust me, guys, you people are smart. You are like, if anyone can do this, trust me, it's not rocket science. Like literally, it's just like a page where it's like, which you put in the code, and it's not difficult. And I think a lot of people just overestimate how much they need to know to do that. So, and when it comes to that, there's a really good course on the ASX website. So asx.com.au. It's called, it's for first-time share investors. So if you're somebody who doesn't know about the share market, or you're interested in purchasing shares and you feel like you don't know enough, it's a great course and it's free. It's on the asx.com.au website. If you go to the education center, you'll be able to see that first course, and then there's other courses as well that you can take there to just learn how to do that.
Awesome. Now I know, Wadzi, for yourself, you also have, you're also going to be running a shareholding course through her economics.
Yeah, I am. And by the way, your photo has disappeared. I'm not sure why I can't see you anymore. It's like black now.
Oh, here we go.
No, you're back. You're back. Yeah, so
yes, you actually are going to be doing a course. We're going to be running a course on share investing.
Yeah. Yes, I am, because I think one of the things that really got me interested in doing a course, because I've never done a course, it's something that I took for granted. But when the share market dropped earlier this year because of the coronavirus, there were so many people who just, it showcased that there was a lot of people who didn't understand how the share market worked. And there's also a lot of people who really had no idea of the power of the share market. So to showcase to you how amazing the share market is. So the Australian share market in the last 100 years, it's gone, like there's been long term, it's been going up. So long term, it's just going up. It's not going down long term. Long term, it's been going up. So the potential for good returns in the share market is there. Of course, there's risk. Every investment. So this is something that's really important. Every investment, if you're going into an investment, you need to know what the risk level is for each investment and be comfortable with that. So you need to learn your own risk tolerance, which I'll talk about in a minute. But every, investment has risk, that's fine. But long term, the share market generally has grown and has gone up. So there's a lot that you can get from investing in shares, especially long term. So I noticed that a lot of people didn't understand how the share market works. They thought that if it fell really dramatically and they jumped ship and they, went out, and I realized, my God, you don't understand, because the share market usually always rebounds. It rebounded from world wars, people. It rebounded from World War I, World War II. It rebounded from the GFC. It will rebound from Corona. Like it's gonna come back. So when you stick with it inside your investment, it will eventually rebound. Obviously, there's circumstances where that won't happen. If, for instance, you're invested in just one company and that company goes bust, But if you're in a diversified portfolio, there's always that very high chance and very high likelihood it will rebound in the next few years. So a lot of people showcase that didn't understand that. So I thought, you know what, I need to do a course. And also I'm passionate, I think, as we're talking about, not enough people that I know, not enough women, but also not enough people in our community are taking advantage of investments, of building wealth. They are too afraid of shares. They are too afraid of investing in general. So I thought, you know what, I want to do a course that will help people take that step.
Yeah.
So we
actually have a link to the event for Wadzai's share class. Essentially, it's a workshop that you're going to be learning more about investing. And I also agree, it's a very undervalued avenue of investing that people don't take advantage of. I think you all know Warren Buffett. He's like the billionaire now that has all this money, but how he actually made money is through shares. He actually was just buying shares in specific companies, and he was just tracking the progress, and he would sell shares, buy more, sell and buy, and over time he's now been able to grow his wealth, and it's just simply by buying shares. And not only that, he is a very, very disciplined man. No matter how much money that he's had, he still drives the same car that he's had for the last 50 years. He's still living in the same house that he's also lived in the last 50 years. So it's not just about, investing and everything. You also need to also have a good habit on how you manage your expenses and how you manage your delayed gratification. It is key.
Yes, indeed. Yes, indeed. I want to talk about Warren later. It's funny you talked about him. That's great. I'll talk about him later. But so there's an amazing story about the power of share investing. And I think that people have to, I love sharing this story because it's absolutely amazing. And also it showcases that you don't have to be this high roller to make money in the share market or to take advantage of investing. So there's this amazing lady called Sylvia Bloom. So she was a secretary. She was a secretary for about 67 years. First of all, she was a hard worker. She loved what she did. But she worked until she was like 96. She just loved it. But do you know the shock that came out is that when she died, it came out that she had $9 million. $9 million. And people are like, where did this come from? And it actually turned out that when she was working, her boss would tell her to go and buy shares for him. And when she would buy the shares for him, she would also buy the same share but with lower, less money because she was on a secretary salary. So
Yeah.
imagine all these years, she just followed what her bosses were doing. They would buy this stock, she would buy that stock, and she would do that. And out of that, she had $9 million over all these different brokerages. And people are like, oh my God. And that money, this is the thing about legacy and also, my passion about that. Her focus wasn't on money for the sake of money. She wanted to leave a legacy and make a difference. And she, I think all that money except maybe 7 million or 7.5 million, she actually gave that to charities and not-for-profits and to colleges so that she can help people who needed help and create that legacy. And her money has been amazing in so many ways. It has helped so many people. So that's an example of the power of the share market, especially long term and also just consistency. Yeah.
Yeah. Yeah. And that's how you build the generational wealth, because
Exactly. It's not rocket science, guys. It really isn't.
Yeah.
It's literally just consistently using your savings and putting them in an investment that will grow with time. That's it.
Yeah.
That's pretty much it. Yeah.
I absolutely agree. And you're talking about risk, because we said the options of investing are, you can have savings, you can also have, you can put money into a super, and then you have shares. Like, what about the risk then? Because how do I know what's high risk, low risk? How does it relate to my overall savings?
That's a great question. So one of the most important things in investing is to understand, first of all, the risk that each different asset class has. So something like cash, for instance, is the least, like the lowest risk, right? So whether it's money in your bank account, or something like term deposits, that's really low risk. So that means, what that means is, when it says low risk, is that there's a and it's very unlikely that you will lose that money from that investment. So the likelihood of you losing money from money that you have in a bank account is very unlikely, especially here in Australia, because the government guarantees. So let's say, for instance, in the very highly, and I mean highly, unlikely situation that CommBank goes bust, because if it does, I mean, if it's about to go bust, let's put it this way, it's so big that the government will try to bail it out, like it will do something. That's not, they're going to make sure that does not happen, right? So let's say the unlikely possibility that one of the big four or one of the major banks goes bust, the government guarantees up to 250,000 in each financial institution. So whatever you have that's 250,000 and less, you won't lose that money. So the chance of you losing money in a bank account is less likely. So things like cash, term deposits are considered low risk. They're there to just safeguard your capital. You don't make, and because of that, you don't make that much from them either. So there's a correlation between risk and return. So the lower the risk, the lower the return. If you move up, let's say you go to things like fixed interest, so things like government bonds. So government bonds is like you lending money to the government. You actually can do that. You lend money to the government, and then they give you, they pay you, interest returns, and then at the end you get your money back. So let's say, if you give the Australian government, the chance of them defaulting is very unlikely. They never have. So, I mean, there's certain countries that you probably wouldn't want to, certain governments you want to give money to. But Australian government, you should be fine. Obviously, if you give, there's also corporate bonds as well. So you can also do the same for companies, but with companies, I guess, depending on which company, some companies will be more risky than others, of course. So things like fixed interest, they are also low risk, but a little bit riskier than cash and term deposits. So they will be more moving to low to medium risk. And then you've got obviously property, and property is more considered medium to high risk. So there's definitely more risk in property compared to cash and term deposits and fixed interest. And then you move from property, you go to shares. So shares are high risk. But then also, because of that, they attempt long-term to also give the better returns. So there's that correlation. So it's important for you to understand that. And then it's important for you to know what your risk tolerance is. And the reason why that's important is because there's some people who, you know, they understand how the market works, they're comfortable. Like, for instance, I'll give an example. I have a high risk tolerance. So ever since the share market dropped in March, I haven't checked my super at all. I haven't looked at it because I know it went down quite a lot, but it doesn't really matter because it's a long term. It's, you know, I'm not going to touch that money until I get to 60. So I'm comfortable with the volatility because I know that there's going to be this long-term growth and I've got time to enjoy that. But there's some people who are just not that comfortable with the volatility that shares will bring, and they're not able to sleep at night. So yeah, fine, shares might give them long-term returns, but it doesn't help if you've got high blood pressure from it. So you need to know what you're comfortable with. And so there's actually quite a lot of risk tolerant tests you can take online. So you literally can, so there's, I'll send you a link maybe later.
That'd be great.
You can share so you can actually try and figure out what your risk tolerance is by asking a few questions or answering a few questions online. There's a number of different ones that you can use, and they can tell you that you're conservative, or you are, you know, you're more into defensive, or you're more into high risk. So they'll help you figure that out, and that will help you decide what you invest in. Yeah.
Awesome. We actually got questions from the audience. So I'll start with one from Zamzam. So Zamzam said, for those who may not take interest on a religious basis, so we're talking about the Muslim community, will the focus be on super and shares in terms of building wealth?
Okay, that's an interesting question. So I guess the question is, so the interest is they're not interested in like money. Is that what the question is about? I'm trying to figure out what that is.
So like within the Muslim community, you don't essentially take interest. Well, essentially you're not allowed to take the interest. You just the basic capital. So it's like Islamic finance. So
okay.
In the Muslim community, would that then mean that the focus be on super that they're getting from the company, as well as just buying into shares, investing into shares?
Yeah, so I guess it depends. I mean, like with shares, for instance, so if they're fine with growth, so are they okay with long-term growth then? Is that what it's like for the Muslim community? So you would then be focusing on capital growth, right? Or on investments that are more about capital growth. So super does offer dividends, like income from the company's profits, but you can actually reinvest that back into the share portfolio anyway. You don't have to take it out. And then you can focus on just the capital growth over the long term. So I guess that can be a focus, but it also depends how comfortable the people are in investing in shares and how much of their portfolio, because there's another very important thing here called diversification. So you don't want to have all your money in shares. You want to diversify in different asset classes, because that will lower the risk of your portfolio. So if, you know, sometimes when shares are doing well, you know, bonds are not doing so well, and vice versa, then that way different sectors maybe do well in different times, and then that can counteract any big fall. So you want to have different sectors. So for people who are not interested, I guess, in taking interest or income, then you're just focusing on the capital growth, right? Or the value increasing. So you'd be focusing on you know, assets that are not really about generating interest per se, but are about the capital, the growing long term.
Awesome. Thank you for that. And we have another question from Nasima. She said, I have an ethical dilemma with wealth. I almost feel as if wealth will desensitize my compassion and empathy for others, as I've seen this so much. I inwardly wish to not be wealthy, as if it's a choice I have to make. How do I overcome this mindset? That's really deep and really true.
I love that question so much, because it's something that I love to talk about. I'm so passionate about talking about it, in fact, because so many people, and this comes from my money mindset that we've all gotten as we've gotten old, like when we're children, right? From the time we're
Yeah.
children, there's certain things that got drummed into our heads around money, whether it's that money is the root of all evil, or, you know, only greedy people are rich, or rich people, you know, you only get rich by ripping people off, all this other stuff.
Yeah.
And also the fact that, you know, money will, if you get rich, all of a sudden you become, you know, you become power hungry and you become greedy, and all of a sudden you become this person. So this is the thing, right? Money is neutral. Money is not evil. It's currency. It's just, it's there to be used. So what matters is who you are as a person. So one of my favorite things is that money, whatever wealth that you have, how you use your wealth is about what you value. So
Mm.
people don't just automatically lose compassion because they have wealth. That's not how it works. You don't change. It just amplifies who you already are. Okay? So
Ah,
those people who don't have compassion is because
they
they
never
just
had
did not have that
it.
much compassion in the first place. So a good example. So I like to always say this, and also that saying of money is the root of all evil is actually wrong quote. It's from the Bible. It's the love of money is the root of all evil. So money is a tool. Money is a tool that can be used for good or for evil or for whatever. It's about the people and what you do with the money. So one of the things that I think I will help her with is I want to give some examples, right, of how much, think about every single thing in this world, all the amazing things that have happened, the people who've been helped in the world, your own family, yourself, some of the amazing experiences you've had, bring people being brought together. Money played the central role in all of that. So much of what elevates and is positive about this world is made possible by money. And also another thing is some of the wealthiest people in the world are also some of the most generous people. In fact, they are mostly. So I'll give an example. Warren Buffett. You were talking about Warren Buffett before. So Warren Buffett, he just, well, I think he's, at the moment, he's about $70 billion net worth. It actually went down about 30 million because of the corona. But
Yeah.
he is one of the most generous people on the planet. Since 2000, Warren Buffett has given away $46 billion. $46 billion. Imagine how much of a difference that money is making to people
Yeah.
around the world. He's given it to different organizations which make amazing impact in the world. Imagine that. So obviously the money that he's made has amplified his level of compassion and love for other people, and he's using that. And that's
Yeah.
power right there, and he's making a difference. And he's also signed, so him and Bill Gates and his Bill Gates' wife and so many other wealthy people have actually signed something called the Giving Circle, I think it's called, or something like that. And what it is they've all, the Giving Pledge, I think it's called. So that pledge is they've all pledged to give at least 50% of their wealth away. So Warren Buffett has gone further. He is going to give 99% of his wealth away. His kids
Wow.
will only have 1% of his, by the time he's gone, he would have given 99% of that. So imagine the impact that has had, that is going to have, and it's having. So there's so much power in wealth, and you can make a huge difference. It doesn't have to be even that big as the Warren Buffetts. That's like on another level. But you yourself, just look at the community, like things that are happening in the community, the power that you, as somebody who creates wealth, the impact you can have on your community, on organizations that are doing amazing work and don't have the financial resources. You can make a difference with wealth. So I think the best way to change the mindset is to look for all the positive examples that I've just provided, and also just around you, of the power of wealth and when it's used. It's about your values, right? So for me, I think the building wealth is not about building wealth for wealth's sake. It's about using the wealth that you are building to make an impact for yourself, but also for people around you as well. And that all goes to values. There'll be people who value money for money, and they will use it. in whatever evil way you want to, or a non-compassionate way. But there's a lot of other examples of people who've got great values around, empathy and compassion and love, and they use it that way as well. So money is not evil. It's just, it's currency. It's a tool that people use. So you look at it that way. Yeah.
And that's an amazing point to sort of end on, because the truth is, yes, it's your values that will determine where your money is going to go to, or where your wealth is going to go
exactly.
to.
Exactly.
Mumbai said that, philanthropy is a way, is a form of, giving money to a greater good. That's
definitely
one way of looking at
it.
That's
a great example of that we were talking about before.
Yeah. Moisture Love said that, you can give a percentage of the income to help others. So in the there's tithing, that's in the Christian community. You can even if you're non-Christian, you can decide to say, I'm going to give X percentage of my income towards something that I'm passionate about, towards the community. Like all these organizations, not-for-profit organizations, they're always seeking for funding. We are always seeking for funding. So if you do have, because we run on volunteers, we are dependent on people's generosity around time and their money for us to be able to run. So if you do have any extra that you can provide to further causes or passions that you have, you can actually give towards the community. So that is a great opportunity to do that.
Exactly. So imagine building wealth will help you with that. It will make a huge impact for the community and everyone else around you. So don't feel bad. Get into that wealth, girl. Get into it.
Thank you so much, Wadzi, for this very enlightening and insightful topic on building wealth. I think it's very important for us to actually have that, positive relationship towards money. As you said, it's not, there's nothing wrong with the money. It's the love of money that then, causes
the love
you to
of money.
Yes,
exactly. Because money itself, money itself is,
that's the tool.
Nothing wrong with it. And it's got so much power to make a big impact for our community, like so much. So don't even feel bad about growing wealth, because you can make a huge impact, not just for yourself, but for everyone else around you as well.
Yeah, I absolutely agree. Yeah. Thank you so much, everyone, for joining us. I really appreciate you, Wadzi, for taking your time, your free time that you've donated to us. To empower our young people.
It's gone so fast. I can't believe it's already done.
I know.
Where's the time? I still have so much to talk about. Damn.
Well, if you have any questions, queries, or comments about what we talked about, reach out to Wadzi through Herconomics. Follow her group. She's always having sessions and discussions about, building wealth. And if you have any queries, put through in the comments. We're happy to forward it through to Wadzi, and then we can continue on the conversation.
I am totally happy to have any of you guys personally message me, whether it's on my personal Facebook or Instagram, Messenger, whatever. Send me a message. I'm very happy to have a chat with you guys. There's so much I wasn't able to get into, so happy to get into that.
No worries. Well, next week we're actually going to be having a business owner, because we're now that we know how to manage our finances, we're now going to look at other opportunities on investing on our own passions. Maybe you want to start a business, and so we're actually going to have an online business owner, Lani. Hey, Lani, wave to everyone.
Yeah,
and we're going to be talking about how to run an online business. Very, very critical, especially around this COVID times, where you don't have the opportunity to actually run a brick and mortar business. So please join us again next week, 6 p.m. same time on our IG live, and we're going to be talking about running an online business. Thank you, everyone, for your contributions and for your participation. Have yourself a wonderful, wonderful evening, and stay empowered. See you guys.
Bye.